Hello, everyone. Welcome to the Options Income Blueprint Options Income Weekly Live on October 10th, 2022 at 11 a.m. Eastern with Michael Schulman. My name is Emily Norris with Traders Reserve. We are recording this session. We'll be posting it to the member website. We'll also be sending it out to you via email as usual. If you have any questions for Michael, just pop those in the Q&A box and we'll get to those once we've wrapped up our presentation. With that, I'll let you take it away, Michael.
Questions? Did you say questions, Emily? The reason I say that is what we're going to look today, I alluded to last week, but I want to spend a few more minutes on it, is the Charles Schwab trade that was closed last week. And I didn't get any emails, but I've gotten emails about this account and this position and others. And so I really do want to linger on it. Last week, a very bumpy week in the market, but not for us. We closed things early, trades. We closed trades early, and it's a good thing that we did. And one of the reasons is not to avoid rolling positions, as you'll see when we go through the Schwab trade. But in this kind of a market, remember, you're shooting for 0.5% to 0.8% a week. In this kind of market, when you get a big bump down, you can end up underwater. In the history of the service, where 85% of all rolls are done within a week or two, maybe more, maybe higher than 85%. But in this kind of market, you can get hit hard, assign shares, and you can take months to get out of a position, as what happened with Charles Schwab. So I would much rather close a position and free up capital for higher rate of return trades. On the other hand, we did bring in a bunch of cash, 47,134, 207, 298. And that's on a limited amount of fresh capital put to work, or existing capital in the form of the Bank of America and General Motors calls. So these rates of return are very, very high. And it shows the importance of hanging on to your capital and not jumping into losses because you're frustrated or you're fearful. So last week we're a little bit below goal. We were a little bit above maximum capital. I try to keep it at 50. It's a smidge above, but 19% still pretty good in a market that's down 18%. So there's the overall performance, and it was from new trades and calls. We didn't roll anything. As you may have noticed, and it might change slightly as we go into earnings starting this week. We've been rolling for 2 weeks at a time earlier in the week because we pick up more time value. And so our cash rates of return on our rolls have been better the last 3 months than they historically have been. So speaking of last week, we continue to be aggressive with our closeouts, and that's going to continue. Just to assume that that's going to continue to happen. For those of you who were not in Income Madness did something it's never done. Now, I tried to figure out how many Income Madnesses we've done. I know in the last 3 calendar years, including this year, we've done 23. My guess is we've done between 45 and 50 or 40 and 45. This was the first Income Madness session. We went 17 for 17. We had to roll nothing. We closed it out with a 1.8% cash rate of return in a period of calendar weeks, a week and a half, and trading weeks, a week and a half. And it's because of the last 3 to 6 months of adjusting to trading in and out of the market pretty quickly, but not on a speculative basis based on algorithms. But, well, if we get put the shares, who cares? They're a great company and they're undervalued. The one thing I can say about last week, which I say now, unfortunately for me, every week, who are the bond bull? Who on Wall Street thinks that interest rates are going to stay? I mean, what's going on with these people? Who plays this side of the market? Everybody should be a bond bear. And I met someone whose son is the head of algorithmic trading at one of the largest trading firms in the world, not the country, the world. And we were sharing, I don't want to mention names, we were sharing what his strategy was. And the strategy was, of course, interest rates are going up, and they've just killed it with algorithmic trading to the short side on the bond market. But this mystery remains something that we need to be aware of and we need to trade. We're going to continue to trade aggressively, as you know, with 2-3 positions a week, et cetera, et cetera. And we're going to continue to roll core underwater positions to generate cash. Now we have 4 core positions: Pfizer, Marvel, Citigroup, and General Motors. We have another X-core position, Sunrun, which has been hit hard because of headlines about China, and they source a lot of their components for their product or the materials for their product from China. Those 5 stocks we're going to continue, obviously, to roll and to generate cash. And the only stock that wasn't designated as a core stock, which we're underwater on, generating cash, but underwater, and I'd prefer we close this, Bank of America, and their earnings are coming out next Monday. So for those of you who are brand new and looking, well, you have all these underwater positions, why am I here? Some of those positions have been on almost a year, and they're designed to throw off cash. And it's an investment approach, meaning we love the company and love the stock. We're just going to continue to throw off cash. Speaking of which, I get a lot of emails, and it's sometimes from people who've been in this service or income masters for a very long time. Why don't we just cut our losses and move on? It's a healthy attitude to go, wait a minute, I'm sick and tired of this. But that's an attitude and it's an emotion. It is not a rational way of approaching something. And for those of you who both new or old and older in the service and don't want to listen, or have listened and haven't heard, or have heard and don't want to agree, that the basis of being able to sell short-term puts and calls very close, with strike prices very close to the share price, is predicated on the fundamentals of the company and the stock, the company in the real world, the stock in the market, which in turn is an approach based on capital preservation. So when I think of capital preservation, it's not about how we did on Friday. It's sometimes how we did by the quarter, but it's capital preservation for your core portfolio that you're going to need or want forever to generate cash and income. So that belief, capital preservation, leads to a fundamental approach to creating your bullpen and the stocks and the companies that are traded. And that in turn lets us be extremely aggressive in selling puts and calls close to strike prices, because we're indifferent to a certain extent about being called out. We're different to being assigned, especially in core positions. So, so the index is down, the S&P is down about 18% since we put the trade on. Keep that number in mind. That's April, May, May to June, June to July was April 19th. April, May, May to June, June to July, July to August, August, September, September. So roughly 6 months. And you can take a look at this chart. The emotion might have taken here, oh God, I gotta go. Oh God, I gotta go, and so forth and so on. And you would have had a paper loss of 17.5%, which you're not going to make up in this kind of a market in this period of time in 4 months. That would be a over 50% rate of return. Let's say you say, no, I want to take a loss and free up capital, but by taking a 17.5% loss here, you would have had to generate a 17.5% gain by here. That's not going to happen. Because remember, we're not doing day trading. We're doing one-day trading, which I'll discuss in the last slide when we talk about the Millionaires Trading Club. So we aggressively traded Schwab. Now, why I'm lingering on the chart, but let's get back to fundamentals. Schwab is one of the big brokerage houses. Brokerage houses are now, their profits are predicated on the number of assets that they control, your money, my money. I'm a Schwab customer, not commissions. Well, with interest rates going up, they can charge more for margin rates. They can charge more for overnight loan rates to other financial institutions, and so forth and so on. So time was on their side. And so, I'm sorry, I hit the button. So over here, we closed. We broke even. We avoided a 17.5% loss. And if you were trading the indexes instead of Schwab, we avoided an 18% loss. To me, that's a win, but I'm not going to claim it as a win. We broke, Emily and I agreed as soon as we could close it for 26 cents, which we did, we're out. Because, and all of this is in the training materials on the website. After you roll something 2, 3, 4 times, depending upon its volatility, you're targeting break even. I have made, I put bad timing into the trade. I've timed the trade the wrong way. So you want to get out of break even, but you don't want to take a loss and reduce your core capital. So trading this week, in a reflection of that, expect 2 to 3 new trades and some by alert. We're going to close them when we hit our rate of return goals, as we did last week, as we did in Income Madness. And we're going to continue to generate income as we roll the core stocks. And the one other, well, let's say Sunrun is not a core stock anymore. And as we roll Sunrun and Bank of America. Now, the market, I'm not a technician. I follow technicians and I can read a chart. The market continues to trade up, down, and around 3650 on the S&P 500. It's a number I've been talking about for months. Q3 earnings are upon us, and for us, the big banks will set a tone for the market. They'll set a tone for Bank of America, even though they announce next week, and Citi and Delta Airlines announces, and it's a stock I'd like to begin trading again. But travel fares are coming down. I check travel fares every Friday and hotel rates every Friday. And you also have a couple of big name airlines that are competing internationally now. They're following the Turkish airline model, which is if you're willing to fly considerably out of your way to Istanbul, take a day, take a bus, drive around the city. You can get really cheap business class and first class and regular fares. And Portugal, TAP, the airline of Portugal, is to start to do the same thing. So there's pressure on high margin travel. There's certainly a reduction in fares that I can see, minor, but there in domestic routes. And did I mention the CPI numbers come out on Thursday? Last time the CPI numbers came out, I was shocked. I'm not supposed to be, but I was shocked by the violence of the market reaction to them. Again, what are people thinking? Is the question. And I think the real confusion in the street is it the underlying inflation gauge? Is it the core CPI? Is it wholesale price index? It is non-core CPI. It's a whole bunch of things. And algorithmic traders trading bonds, which hits equities immediately, all have different approaches to what the CPI would mean. So we may only do one trade tomorrow. We certainly will do 2 or 3 this week after you see the first earnings come out. The bank stocks are on Friday. Delta's on Thursday, and we'll see how it goes. I alluded to the Millionaires Trading Club. It's in person or virtually. I really, we do the Investor Blueprint Live in Florida, and we do the Millionaires Trading Club in Las Vegas, twice a year things. And last year, I was so pleasantly surprised. It sounds like a cliche. It's not. In that it was all new material, a lot of it about capital allocation. It was well received and, of course, questioned. And there was, of course, pushback, and there was discussion because I do one-on-one office hours. We also do those for virtual customers. And what I learned was more important, I think, than anything else, which is one of the reasons I'm always encouraging people to come to these things. I learned the fear and the need to protect was beginning to come into the market. And not into the market, into our membership, that people have made a lot of money post-pandemic. And I'm not going to give a number because I don't know what the number is, but if there were 100 people whose names were familiar and 50 people that I knew, I'd say a percentage of those more than the previous year were looking at withdrawing cash for whatever reason from their portfolios. Not a large percentage, but a noticeable percentage, and I'm assuming it'll increase this year. So I'm building on that presentation from last year with a lot of granularity about reinvesting versus withdrawing versus pure appreciation. And I'm adding, which I've never discussed before, speculation. There's also a session on contrarian stocks, and the contrarian stocks will be 5 names that you know, but they're contrarian picks now, plus 5 new names. And we'll be live trading, and hopefully the live trading will pay for the cost of you coming to Las Vegas or doing this virtually. And the last point was at breakfast, at lunch, at dinner, at the wine bar, whatever, at the reception, you learn from your colleagues as well. And that's really, really, really important, both at the emotional level of shared experiences and at the learning level of different trading tactics. So with that, I'll turn it to Emily.
All right, Michael, we don't have any questions yet.
I did get a question by email this morning. And I'm guessing or sensing this was from someone new. Do you, and I'm sort of saving this for last because I'm discussing it in Las Vegas. Why are we not sitting out the market? Why are we not sitting out earnings season, whatever? And that's someone who's trying to time the market, which if I could time the market, do you think I'd be sitting here right now? I'd be up on a perch on some mountain that I had bought, or I bought an entire beach town instead of just one house at the beach. And you can't time the market. You think you can, and some people can time it for a year or two. I have a friend who did 70% a year for 2 years as a SPX credit spread trader. But I'm accepting the reality that you cannot time the market, but you can. If you know a company and a stock, you can invest in a stock for the long term and you can time short-term trades. So that is the reason that I'm not a market timer. Now, on the other hand, the last 6 months have really put many people off their game. They're sitting things out and so forth and so on. So at Millionaires Trading Club, there is a session called the One Day Trader. And excuse me, it's not day trading. Day trading is a whole other discipline. It's very mathematical, algorithmic, chart driven. And I became familiar with it many years ago, actually through a family member who was 100% a year, literally hedge fund math guy with another partner who traded 2 stocks, both of whom don't exist anymore, Lucent and Compact. And he was also captain of the American bridge team. So you can imagine how his brain worked. And he explained a lot of the nuts and bolts of day trading, and one day trading is totally different. And I'm going to go through the mechanics, because what one day trading enables you to do is, let's say you can replicate the results that we saw in Income Madness. It was 1.8% in a week and a half. And let's say it was 1.5. It means that based on what you read, or based on your travels, or based on how you feel, or based on your concerns, the emotion and the reason come together in one human being. You may sit out the market for a while, but with one day trading, when you get back in, you can still get very high and exaggerated returns. If you did 20 Income Madness sessions for yourself, that's 35% a year. And you'd be in the market 35 to 40 weeks as opposed to 52. So John, Dave, Emily, and I felt it was important to put something like that in, to reflect that the market has put people on the back of their heels, and they need not be, but there is a solution, which is to take a one-day trading approach. And in fact, it's, I think, the first session that we're doing. Any questions?
Nope, no questions.
Well, thank you all. And if you're watching this later and you have questions, of course, send me an email.
All right, thanks, Michael. Thanks, everyone, for joining us. We have recorded this session, and we will be posting it to the member website, as well as emailing it to you in your Options Income Weekly newsletter. We meet tomorrow for live trading at 11 a.m. Eastern. Thanks, and have a good day.